Alright, so starting off again, just resetting a little. Need some water. Just doing a daily recap, starting off at the 50-minute. Just a little recap of what we were seeing. Okay. So here, as I was explaining, I just got disturbed. So here, midnight open. So we've been seeing bearish prices, okay, and running down lower highs, lower lows, and these pools of liquidity is to draw on liquidity. Okay, so as midnight opens, rallies up, sweeps London's high, as I was saying, and then rallies down. Okay, and then right here, this initial rally down, I'm not taking any shorts. Okay, the reason why is because it just opens, and I knew like this rundown is gonna fall. It's gonna fall short. That's not gonna be the main move. And so, as you can see, this big move is the main move. So, we will have this fair value gap. I don't really like using fair value gaps. I do, but I just put a mental note. Okay, I put it more. I utilize more in the opening range gaps and more like that. Okay, so sweeps London's high, and then see 8:30 opens and just rallies. Okay, and I'm not gonna be looking for an entry, especially when I wait for the 15-minute candle to close. So we have Monday's opening gap partially fills it in, and then here it does a complete closure. Okay, so during this whole time, I'm just waiting and relaxing and just letting price do its thing. This is I'm seeing this as the manipulation leg. And if we drag the standard deviation, you see we're at like around -1. We use this low right there. So you can see that this whole time I'm just waiting, okay? And that's what I like about midnight and 8:30 opening. Is that they give me so much context and something that I don't have like I might not have a strong indication, and I just put those 2 points in, and then boom, I know where it's gonna go. So it sweeps highs, rallies, and then 9:30 opens up for the premium 9:30 opening range, fills in the Tuesday's new day opening gap while getting to sell side liquidity, and while also to the point. Look, it doesn't. I don't know why it shows a gap, but low comes in at 189 to 1188.5. So we're like 0.5 points from a complete closure. So going from that, so I'm just gonna be stripping down. Okay, see, it's nothing. 3-minute. Okay, so this was kind of the problem. So I was in the 1 minute, obviously, and let me go back to the 5 minute. And I was looking at ES, and I think it did sweep, take out the same lows. Where's the low? We have this low. What? See, so that was extra confluence. It didn't sweep the low either. But during live, obviously, it's a little trickier because, the candles are moving. But either way, the sweet's low, and that's all I needed. Okay, that's like number one for looking for an entry. So I'll go down in the 3 minute. And I was looking at this high, but it's just kind of tricky because it didn't break market structure. Okay. But it did, and then I'm just gonna look at the 2 minute. It did on the 2 minute. Okay. And okay, so this was like kind of the problem on deciding my breaker, because you can see here it just respects consequent encroachment and breaks market structure, and here's the breaker. Okay. But I was ignoring this high because on the 1 minute, I was utilizing this high. Okay, you might be saying, why that high? Well, I was also having trouble like figuring out which high, and that's something I need to refine based on my model, and something I need to work towards on. Like figuring out which high to use. Like, do I use this high? Do I use this high? You know. And looking back, maybe I should have used this high, but even again, it's because I saw this market structure shift, took out the lows, and so when it takes out this low, makes a lower swing low, I'm going to the left because essentially it did this. There was a low, takes out the low, and then that market structure shift, that's what I'm going based on, and that's my breaker. So that's the idea behind it. So I wasn't looking at this low, I was looking at the overall sell side liquidity, which is a low. And so I was using this breaker, and then I saw first presented fair value gap right here. You can see 930 opens up right here. It does all this mess, and it breaks market structure. Okay, and it rallies. The reason why I was using this high was because the breaker was inside the first presented fair value gap within consequent encroachment. So it was on the premium side of a fair value gap. And it's really rare seeing a fair value gap overlapping a breaker. It's usually a breaker overlapping with a fair value gap. But the main model, or my model, is that I'm entering on one of those conditions. Or not one of those conditions. I'm entering on the overlap of both breaker and fair value gap. It doesn't matter which one overlaps. It's actually better if the fair value gap overlaps the breaker, which is exactly what it does. Okay, so it breaks market structure aggressively, and then I'm literally here entering at consequent encroachment of the breaker. And so then I'm like, or I entered the trade, and I feel confident. I'm not really feeling um I'm not feeling anxious. I'm not, because I did meditate. That's really helping me. But I'm not feeling I'm not feeling anxious. I'm not feeling any like, oh, I'm gonna miss this move. I'm not feeling like past emotions I was feeling. I'm not feeling them anymore. So I'm like, okay, so I enter here, consequent encroachment, then it comes back with this up candle, consequent encroachment again. Then right here, ICT assures that we want to see this first presented fair value gap be respected to the upside, meaning only wick through, only wick, not bodies, because that's high probability standards. And so that's what we're seeing for 2 times. And then at 9:42, at a random time, it just breaks the breaker, breaks below the first presented fair value gap, and here's my stop loss. Okay, The reason why I was there, that was my stop loss and not below these lows was because um first the risk and reward was not that um if I place it over here it'll be way too bad. Like a shit. So I entered here. And my target was this high. Which is a 92-point move. Okay, and then my stop was right here. Around 29 points. Let me see. 29 points. 29.5. Let me see this. Mm, 942. Yeah, 942 knocks me out. 20. Wait, what? Oh yeah, I got out. I got out early. So here was my stop, and I actually saw this candle just rocketing down, and I canceled the trade early for a 2 point extra, I guess. But if I had, it's because I wasn't trying to enter down here because there was no breaker, and that's part of my model. So this was the nearest breaker that I was utilizing, basically. And yes, I saw these highs, I saw the market structure, but there was no breaker. And I saw this, and there was a breaker. So that's what I was utilizing, basically. That's what I was using. Okay, and it was inside the first presented fair value gap. Okay, and it still kind of makes me mad. Or not mad, just like I said, this whole month has been annoying. How just these crazy volatile wicks just knocks me out just like that, and it's like annoying because as you can see, it goes to my direction. It's just I don't know. And so after that happens, obviously I just accept the loss and there's no more entry in terms of my model. Let me check that actually. Let me see. If I use this high, because that's another breaker. There was two breakers. Okay, there was a higher breaker and there was a lower breaker. I was using the lower breaker. Yeah, see, there was a fair value gap here, but price hasn't even reached out to it. And yeah. See, my model is not just I enter on breaker. I'm entering on a breaker with a fair value gap. Okay, with the order block. Also, entering on the order block. I saw that. Yeah, so kind of pissed, obviously. And there was another breaker here where sweeps the lows, and then that makes higher. But then again, there's no fair value gap. See, so that's what it was kind of came down to. Okay, but overall, I'm still kind of happy that went to my objective this high. First presented fair value gap and still leaving this Tuesday's opening range open, only about 25%. So you can see and see, like, actually, I think it's that way. 25% because here's equilibrium around, and then just rallies down. Look at these clean highs. Okay, 12 p.m. This is all lunch, and then just rallies down. Here's opening. Again, no real entry. And that's the reason why I don't trade PM. Look at this. What is this? See, you can see just the craziness of this whole price action, and I'm in this losing streak, but You just need to focus, stay disciplined, and yeah, I'm doing the evaluation count in this week, after this week, and I'm not honestly expecting a pass, especially based on my performances, and I just need to get a feel for it, mm, and yeah, so not expecting a pass, but of course I'm gonna do my best to possibly do a pass. But this is my motto: breaker, fair value gap, market structure shift. Okay, obviously it didn't pan out, but it still went the direction. Looking back, what I learned? What I learned? I definitely learned about my emotions. Um, there's, yeah, this was like a 3-2-1 trade, and what I learned was to get better at recognizing this. Okay, because on the 2 minute, you can see that it breaks market structure, and but there was the breaker was up here and the fair value gap was here. So maybe it wasn't as high probability, but you should have still respected those levels, and it didn't, but it still went.